Should the CBN be concerned about the rise of non-banks? The governor of the Central Bank of Nigeria, CBN, Olayemi Cardoso, stated that rising transaction volumes by non-banks threaten financial stability in West Africa. He stated this on Monday at the 10th meeting of the College of Supervisors for Non-Bank Financial Institutions of the West African Monetary Zone. He said, "We reiterate the importance of monitoring trends, risk and innovation of NBFIs or OFIs, also known as non-bank financial institutions or other financial institutions, as their increasing transaction volumes pose major financial system stability risk." Fintech loans are one of the most commonly reported innovations. While overall, this may appear small in relation to the size of credit by DMBs, some jurisdictions globally have noted a growing trend in the volume of these loans. In many cases, fintech credit is provided via electronic platforms that connect leaders to borrowers, in which case the platform takes the role of a financial auxiliary. In some cases, however, loans are taken on the balance sheet of these platforms, even if it is short-term, in which case the platforms are akin to new types of financial intermediaries. These entities are typically fintech firms that offer applications, software, and other technologies to streamline mobile and online banking. In many jurisdictions, these digital firms have a banking license and are subject to prudential requirements, or they may just be regulated as fintech payment service firms. Innovations linked to crypto or stablecoin assets were also reported by some jurisdictions. What are non-bank financial institutions? Non-bank financial institutions are essentially financial service providers that operate outside the traditional banking system. This includes companies like fintech lenders, payment service providers, and even some microfinance institutions. Why the CBN is concerned about these NBFIs? These fintech platforms are innovating how Nigerians access financial services. While that's positive, the central bank is worried about the sheer volume of transactions happening outside their direct supervision. Here are some reasons the CBN is concerned about the activities of NBFIs. Number 1, financial system stability risk. In his statement, the CBN governor mentioned financial system stability risk. What does this mean? Imagine a scenario where millions of Nigerians rely on unregulated platforms for loans. If those platforms fail, people could lose their money, and the financial system could experience a ripple effect. It is like a house of cards. Traditional banks are heavily regulated to ensure they have enough reserves to handle withdrawals. CBN don't yet have the same level of control over NBFIs. Number 2, consumer protection concerns. Fintech innovation often moves faster than regulations can adapt. The CBN worries that consumers may be exposed to unfair lending practices, hidden fees, or inadequate data privacy protections with NBFIs. Without clear regulations, it may be harder for consumers to seek redress if they encounter problems with these platforms. Traditional dispute resolution mechanisms designed for banks may not be readily available for NBFIs. Imagine a scenario where a Nigerian student utilizes a mobile loan app to bridge a financial gap. The app might offer a similarly, attractive loan with a low advertised interest rate. However, upon closer inspection, the terms and conditions might reveal hidden fees that significantly inflate the total cost of the loan. Furthermore, the app might not have adequate data security measures, potentially exposing the student's financial information for the world to see. If the student encounters difficulties repaying the loan due to unforeseen circumstances, unclear regulations could make it difficult to negotiate with the app or seek help from a regulatory body. Number 3, level playing field. Traditional banks are subject to stricter regulations and higher compliance costs. This can put them at a disadvantage compared to NBFIs that might operate with looser controls. The CBN wants to ensure a fair and competitive financial landscape. Unregulated NBFIs could distort the market and stifle innovations from established players. Fintech, friend or foe? You might wonder, isn't fintech progress? Shouldn't we embrace innovation? Absolutely. Any forward-thinking government must embrace involving innovations and technologies to make life easier for the populace. Fintech can be a game changer for financial inclusion in Nigeria. However, innovation needs to be balanced with regulation. The CBN needs to ensure these platforms operate responsibly and don't expose consumers to unnecessary risk. Now, solutions. The CBN is likely looking at a two-pronged approach. First, they'll need to introduce clear regulations for NBFIs, ensuring they have proper capital reserves and consumer protection measures. Second, they'll need to collaborate with these platforms. Imagine a system where NBFIs operate under the CBN's umbrella, fostering innovation while maintaining stability. Empowering consumers with financial literacy can help them make informed decisions when utilizing NBFIs. Educational campaigns can raise awareness about potential risk and equip consumers with the knowledge to identify unfair practices. The key is to find the right balance between embracing innovation and safeguarding the Nigerian financial system. Let us have your comments. So subscribe, like, and follow at Official Conga TV on all social media platforms. Till next time, stay informed.